Imagine walking into the office of the most powerful money manager on the planet. $13.5 trillion under his control. More money than the GDP of every country on earth except 3. You sit down. You ask him the question everybody asks. Is Bitcoin too risky? He looks at you and he says, Bitcoin could replace the US dollar as the world's reserve currency. That's not some guy on the internet. That's Larry Fink, the CEO of BlackRock, the man who once called Bitcoin an index of money laundering in 2017. 8 years later, his firm holds over 770,000 Bitcoin. Something has changed, and most people haven't caught up yet. I'm the Bitcoin veteran. I've been holding since 2017. And today, I'm going to show you why the biggest risk in 2026 isn't owning Bitcoin. It's not owning it. Now, I'm not a financial advisor. I'm sharing my personal experience and the lessons nearly a decade of investing taught me. Always do your own research. Let's start with the man who changed his mind. Here he is, the CEO of BlackRock, the largest asset manager on the planet. In his own words,
and so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative.
Did you hear that? A proud skeptic turned believer. And he didn't just change his words, he changed his portfolio. BlackRock now holds over 770,000 Bitcoin. And at Davos in January 2025, Fink told Bloomberg that if sovereign wealth funds allocate just 2 to 5% of their portfolios to Bitcoin, the price could reach $500,000, $600,000, even $700,000 per coin. The man running the largest asset manager in human history isn't just endorsing Bitcoin anymore. He's making the boldest price prediction in Wall Street history, and his actions back it up. But here's what blew my mind. It's not just BlackRock. Vanguard, the company that refused to offer Bitcoin products, that told its clients crypto was too speculative, quietly bought over $500 million worth of Strategy stock in early 2026. Strategy, formerly known as MicroStrategy, holds over 720,000 Bitcoin. That's more than 3% of every Bitcoin that will ever exist. And Vanguard didn't just dip a toe. Across all their funds, they now hold over $3.2 billion in Strategy shares. Think about that. Your grandmother's retirement fund manager is now one of the biggest indirect Bitcoin holders on the planet. But it doesn't stop there. Sovereign wealth funds, the investment arms of entire countries, are buying Bitcoin on every dip. Larry Fink confirmed it himself at the DealBook Summit last December. They bought at $120,000. They bought at $100,000. They bought more in the 80s. These aren't speculators. These aren't day traders. These are the most conservative, long-horizon institutions in the world. And they're all doing the same thing. They're accumulating Bitcoin, quietly, methodically, with purpose. The boring money just showed up, and it's buying everything in sight. And while the boring money was piling in, something else happened that most people completely missed. The regulators opened the door. As amazing as it seems, the SEC and the CFTC issued a landmark joint ruling. For the first time in history, they officially classified Bitcoin, Ethereum, Solana, and 13 other major cryptocurrencies as digital commodities, not securities, commodities. Why does that matter? Because it means Bitcoin is no longer in legal limbo. The years of will they ban it, won't they ban it, those are over. 6 days before their ruling, the two agencies signed a joint agreement to coordinate how they oversee crypto going forward. They're not fighting over it anymore. They're building a framework together. And the CFTC went even further, lifting option limits on crypto derivatives. Translation? The institutional floodgates just got wider. Now connect the dots. The biggest asset manager in history says Bitcoin could replace the dollar. The most conservative fund companies are buying in by the billions. And the U.S. government just gave it a regulatory green light. This isn't a moment. This is a shift. And shifts like this don't reverse. But you know what really convinced me? It wasn't the headlines. It wasn't Larry Fink. It wasn't the SEC. It was the math. I've been holding Bitcoin since 2017. I have seen 80% crashes. I lost 6 figures in the BlockFi bankruptcy because I trusted a custodian with my coins. I've had people, friends, family, financial advisors tell me I was crazy. And every single time, I came back to the same question everyone asks me. Isn't Bitcoin too risky? And here's what I tell them now. The U.S. national debt just crossed $39 trillion. It's growing at $2.4 trillion a year. The debt to GDP ratio is 124%. Your dollars are losing purchasing power every single day. Not because of anything you did, but because your government can't stop printing. Now tell me, what's riskier? Owning an asset that's mathematically capped at 21 million, that no government can print more of, that no CEO can dilute, that no central bank can inflate away, or trusting that the same system that doubled the national debt in 8 years is going to protect your savings? That's the flip. That's what changed. For years, the question was, can you afford to own Bitcoin? Now, the question is, can you really afford not to? And it's not just corporations and Wall Street. Governments, entire nations, are getting on board. Here's Michael Saylor, the man who bet his entire company on Bitcoin, explaining just how far this has gone.
International governments embrace Bitcoin. Spokespeople for the UK, for Ireland, for Pakistan, for Bhutan, for El Salvador, for Russia, in China, in Hong Kong, in Europe, everywhere, right? They all have an opinion. Their opinion is this is very important. This is an extraordinary movement.
Think about what Saylor just said. Governments, not fighting Bitcoin, endorsing it. When the people who print the money start acknowledging that a better form of money exists, that tells you everything you need to know about where this is headed. Saylor put his entire company behind Bitcoin. He hasn't sold a single coin. And now even governments are proving him right. But I want to be honest with you, because that's what this channel is about. I didn't always get it right. I chased altcoins I shouldn't have. I trusted a centralized platform that went bankrupt. I checked the price every 5 minutes during crashes and made emotional decisions I regret. It took me years and some very expensive lessons to learn the strategies that actually work. Write your plan when skies are clear, not when the market is crashing. Zoom out. The monthly chart of Bitcoin has gone up and to the right for over a decade. Stop watching the hourly candles. Step away from the phone when things get crazy. The dopamine rush of trading is your enemy. And remember the fundamentals. 21 million coins forever. no exceptions. Those 4 rules saved my portfolio, and they'll save yours too, if you have the discipline to follow them when it matters. Because the biggest risk isn't the price going down. Price goes down all the time. The biggest risk is panicking and selling before you understand what you own. Let me leave you with this. In 2017, Larry Fink called Bitcoin money laundering. Today, his firm holds over 770,000 Bitcoin, and he says it could hit $700,000 a coin. Vanguard refused to touch crypto. Now they hold billions in Bitcoin-linked stock. The SEC and CFTC spent years fighting over who regulates crypto. Last week, they released a joint framework together. And me? I lost 6 figures, survived 3 crashes, and held through all of it. 9 years later, I'm more convinced than ever. The risk equation has flipped. The institutions see it, the regulators see it, the sovereign wealth funds see it. The question is, do you? If this video helped you see it differently, subscribe. I'm the Bitcoin veteran. I don't do hype. I don't do predictions. I share what nearly a decade of holding through crashes, bankruptcies, and breakthroughs has taught me. Because the biggest risk in 2026 isn't owning Bitcoin. It's not owning it.